Welcome back, investors, to Ticker Time News. I'm Adam, and thank you for joining me for the After Hour Show. We have got a bunch to talk about. We have got about a stocks to talk about. The market has just gone crazy and haywire. A lot of things don't make sense with the market right now. But yeah, we got Zoom to talk about. They reported. Urban Outfitters, they reported. So I've got things to say about them. I wanted to do my deep dive on Palo Alto Networks. I want to do that on Friday, but your questions are just so awesome, and that's the most important thing on this video, to answer your questions. So if I don't get to a particular stock that I want to talk about, that's fine, because I'd rather talk about what's on your mind. So if you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. All right, so while you are getting your questions ready, let me just roll through a few things here. Number one, stocks wavered today as the Dow Jones traded 0.05% higher, just barely, boosted by gains in financial shares. As President Biden, he said he would do it within 4 days on, I believe it was last Thursday or Friday, maybe a little bit earlier than that. But President Biden nominated Federal Reserve Chair Jerome Powell. So leadership is not changing for a second 4-year term, fueled by bets in a sooner rate hike in the U.S. during the year 2022, so next year. Brainard, who was the other top candidate that could have replaced him and is seen as more dovish, will be a vice chair. Meanwhile, both the S&P 500 and the NASDAQ erased early gains and closed below the red line as higher yields weighed on growth stocks. And we'll talk about that too. On the corporate front, shares in BioNTech and Moderna gained after the FDA on Friday cleared the coronavirus booster shots for all U.S. adults. Tesla shares also traded higher after Elon Musk said the company's Model S Plaid could be launched in China by the spring of 2022. On the data front, investors await a few economic releases later this week, mainly the Fed's latest meeting minutes, so those will be coming up. Gold surprisingly dropped 2.4% today, its biggest loss since August. I guess people are under the POW spell that inflation is transitory, that magic word that seems to change its meaning. Some of the big winners today, we got Astrospace. They were up 17%. They got their first mission in space launched and everything was successful. Canoe, which is GOEV, the ticker symbol, they were up 14%. BioNTech, 11%. GameStop was right back in the action, up 8%. And yeah, so we got some movers. NEO was up 7%. So some interesting stocks moving today, but not a whole lot of big gains. Let's hop over and look at Bitcoin, because Bitcoin is getting lower, but it's holding up this very specific price point support. Right here, I've got a blue line, and I've had this now all year long, and it's right about 55,400. Now, that is where Bitcoin seems to be bouncing off of. It's gotten down there today, and it got down there on November 19th also, down to that same marker. Now, just below that, there's a very critical support level for Bitcoin, and that's at 54,500. That's where there's a trend line, an ascending trend line. If it breaks that trend line, that would be very bearish for Bitcoin, and we might have to say goodbye to the year-end rally if that was true, because the whole structure of Bitcoin would change if it broke that support line. So that's very, very important to watch. And again, that's at 54,500 dollars there for Bitcoin. It hasn't dipped that low yet. It got as low as 55,600 today, but not 54,500 where that trend line support is. Let's also look at Ethereum. Ticker symbol ETHUSD in TradingView, and then I use the data from Coinbase. There's a link in the description below for a free account for TradingView. Now, Bitcoin, not Bitcoin, Ethereum. Ethereum is showing a little more bullish sign in its structure. It's really trying to hold put at this 50-day moving average. For today, it did dip below it. It is below it right now. That 50-day moving average is at 41.38 and Bitcoin is at 40.80 right now. So it is slightly below it. Over the weekend, it was above it. Friday and Saturday were two very nice green days. But on Friday and Thursday of last week, it did dip below that 50-day moving average, but bounced right back above it. And then Wednesday last week, it came down and touched that and bounced above it. So that 50-day moving average is a very important support level for Ethereum right now, and it's really just trying to hug it and hold on to that line for dear life and not slip any further. Okay, so there's Bitcoin and there's Ethereum for you. They're falling, but they're trying to hold put. Now, we had two earnings reports after hours that I want to talk about because we mentioned them yesterday during the Catalyst Watch video, which is the most important video I do all week. Now, Urban Outfitters, their ticker symbol is URBN. Oh, didn't do that right. URBN, Urban Outfitters. Now, in the Catalyst Watch video, I said that it looks like we may potentially get a target effect on this stock because it had run up really well. It had broken out of a symmetrical triangle, and then it had already pulled back to find support on the old resistance line of that symmetrical triangle. And the report looked really good. As a matter of fact, the EPS was 89 cents, and that beat by 5 cents. And they had revenue of 1.13 billion, and that was a 16.5% year-over-year gain, and that beat by $10 million. Now, they also reported retail segment comparable sales. Well, that increased 14% in Q3. The retailer says sales growth was driven by strong double-digit growth in digital channel sales, and that's the same from last quarter as well. They had double-digit growth in digital channels. Now, they partially offset that by mid-single-digit negative retail store sales, primarily due to reduced foot traffic. I found that a little surprising. Now, this is remarkable. Total inventory at the end for the quarter was up 18% compared to total inventory of October 2019. That's remarkable. We have a supply chain crunch right now, don't we? A supply chain crisis, you might say. But for Urban Outfitters, they planned ahead. They say that they increased their inventory. They increased their inventory in net sales as a strategic decision to bring certain product categories in earlier to protect against ongoing supply chain disruptions and delays. That was brilliant on their part. Now, this stock is providing a bit of that target effect, like I said in the Catalyst Watch video. The stock is down 11.5% in after hours. Yeah, it was up 3% during the day, but as soon as that report came out, boom, it dropped. I believe it was because earnings were priced in already, and when a good earnings report came out, it dropped. Okay, so that is Urban Outfitters. It kind of fell right into where I thought it would. on the Catalyst Watch video yesterday. The next one that reported earnings today was Zoom Video. Ticker symbol is ZM. Excuse me there. Okay, Zoom Video. There we go. Let this load so you can see here. Now, I'm going to go in and not look at the daily chart here for Zoom. I'm going to go look at the 5-minute chart so you can see this and see what happened. Okay. So Zoom, it fell from a symmetrical triangle, and that is right here just over my head. It's this green line. Let me circle this for you. Right here, there's a green line that it slipped below. That's when it fell out of the symmetrical triangle and today, this happened today, a 52-week low of $238.20 and bounced off a support line that I had in play on the chart at $239. So it came really close to that. And that support line is right here. I've had that on there for weeks now. You can go back and check any one of our live streams that we've talked about, Urban Outfitters, and that line has been there. That is the support line that it bounced off of today. Now, during their earnings, they reported EPS of $1.11. That beat by a penny. They had revenue of $1.05 billion. That was a 35.1% year-over-year growth, and that beat by $30 million. Now, like I said in the Catalyst Watch video yesterday, Zoom has a ton of cash. Looking at their balance sheet from their earnings this evening, or this afternoon, when it came out just after 4 o'clock Eastern time, they have $5 billion in cash. $5 billion. And in the Catalyst Watch video from yesterday, I posed the question, what are they going to do with this cash? M&A, which is mergers and acquisitions to increase their verticals? Are they going to, I don't know, transform their company into something a little bit different? What are they going to do with that $5 billion of cash? That is still the biggest question I have. Now, on Zoom, when the earnings were released, it shot up 7%. 7% in after hours. Now it's down 1.7% in after hours. So the price shot up and then in a few minutes came right back down. So what I did on Zoom today is, as Zoom came out of this symmetrical triangle and as it was falling, okay, when it got to this support level right here, this is where I bought Zoom, all right, down here at this support level. And then I held on to it until, in watching the earnings very carefully, when it came out and the stock shot up 7%, that's when I exited the position. So it was a day trade. Now, what I ended up getting was about a 9% return from the point that it was down during the day and then had rallied here to the end of the day. And then that 7% bounce, I sold it after it dropped. When it reached that high, after it pulled back 1%, that's when my trailing stop loss was set to execute the sell order. Now, I've been thinking for Patreon members, and I've been working on trying to figure out the mechanics of how do I offer the buy-sell signals to Patreon members. Because the Catalyst Watch video, in combination with the buy-sell signals, That is a very valuable data point for you to use, because if you watch the Catalyst Watch video, I said that Zoom could be a big surprise because most people thought, Zoom's done. But I thought there might have been a little something left this quarter, right? I said it in the Catalyst Watch video. And with that, if I would have sent out, okay, I'm buying here on the dip when it got down to the support level, and then, okay, I'm selling now when it, or I should have said, I'm putting a trailing stop loss of 1% on this for after hours. So if it does pull back 1%, then it executes the sale order. If I would have put that out with the Catalyst Watch video, that would have been, I think, extremely helpful. And at least knowing what I'm doing with the trade to help you prepare your strategy and what you want to do with the trade. So this is a prime example of where the Catalyst Watch video will help to guide you on what I'm watching, why I'm watching, and what I'm watching for, and the buy-sell signals for Patreon members. So I'm working on the mechanics. I see that Discord. I have looked into Discord, yes. Patreon does offer a uh, basically like an email type of thing where I can go into Patreon and say, send out an email with whatever it is that I want to say. But to me, I don't think that's a quick enough way to get buy sell signals out there. I also looked at Telegram. That looked like a pretty quick platform. Uh, Discord does too, but it's all about you getting the notification at the right time so you can make the right decision for you. So I am looking into those mechanics. I will have it worked out by the end of this quarter, which is the end of the year, for Patreon members to get that buy-sell signal. And Devin, if you're here, Devin, your suggestion about offering a weekly trade setup with the price points, I think is an excellent idea. It's something that I was planning on doing, but your idea helped me to kind of fine tune that that idea a little bit. So I'm also going to offer to Patreon members a trade setup, a weekly trade setup. Because with my Catalyst Watch videos, I mean, there's 5, 10, there's a bunch of companies, right? And it's hard to know, well, which one might do the best. So, Devin, your idea was excellent. I'm going to implement that idea this quarter for Patreon members, where there's a weekly trade setup where I give you the stock chart, I show you the entry exit points, have it all mapped out, and my plan for it in a short paragraph for Patreon members. So thank you, Devin, for helping me to clarify that idea. I also have another idea for Patreon members, and it's kind of like that list that I sent you, Devin, with the stocks in it for the alternative energy and solar energy. Doing something like that on a weekly basis, just to give you what's moving right now, what's got the momentum right now, what's got the momentum for this week, because that can be very critical information to know. So got a lot of ideas here for Patreon members that we're going to implement this quarter. But enough talking about that. I see their email through Patreon before market. Yes, that's an idea too. But for the buy-sell signals, using Zoom as an example, Yeah, that was good, short and useful. Good. I'm glad that was helpful. Um, yeah, I'm thinking about doing that on. It could be a weekly basis. It could even be a daily basis of what's moving right now, type of thing. Okay. Just lost my train of thought there for a moment. Oh, sugar. Okay. Well, it'll come back to me. Let me finish my thoughts here on Zoom right quick. Their Q4 guidance, and this was very important, and this is why I think there wasn't staying power in the. Oh, now I remember the thought there, Devin, about sending out the email through Patreon before the market. That would work, but the buy sell signal with Zoom, for example, that was such a quick interaction. I'd want to be able to send that signal out immediately, buying the dip right here, right now, setting a trailing stop loss for 1% for after 4 p.m. when the market closed. Maybe email might work, but I'm sure you guys got a lot of emails, so I'm just trying to find a way that doesn't clutter it up so much. I almost wish Patreon would allow push notifications, and that's why I was kind of liking Telegram. But doesn't Discord do push notifications? I'll have to double check on that. Discord just seemed like it was a whole new beast on its own. Okay, getting off track here. I know that's not what y'all are here to see and talk about. Okay, Q4 guidance for Zoom, and this is why there wasn't staying power in after hours, and now it's down 5.4% in after hours. The total revenue is expected to be between 1.05 billion and 1.053 billion. So basically, what Zoom is saying is next quarter is going to be identical to this quarter. So there's no growth. Growth for Zoom, and I think this is very important, it seems to have found its bottom, right? If their guidance for next quarter is to be nearly identical to this quarter, then that means that growth has slowed down for Zoom. So it should be finding a bottom relatively soon, as the company itself, with its sales, may have already found that bottom, that slowdown growth bottom. They're also expecting EPS to be between $1.06 and $1.07. So again, right on par with this last quarter right here. Now, for the full year 2022, total revenue is expected to be between 4.079 billion and 4.081 billion. Okay, you take that out to 4 quarters, and that is $1.02 billion a quarter. That shows to me that the growth decline in Zoom has found its bottom. All right, EPS for the fiscal year is expected to be between $4.84 and $4.85. So they've really got this narrowed in and targeted, and that's probably due because Zoom, right? They might collect a full year's worth of payments for their services, and then they can't report that on one single quarter. They have to report that for the quarter that money was used for. So that's why I think they're predicting on target here such precise numbers. Now Zoom is down. Well, it was 6.2. Now it's back to 5.9. So it's really finding support down here. Right now, it's at this trend line. It's finding support where this last red candle is on the chart. That's where the price is right now. So it's finding support there. And of course, it bounced off this blue line around $239, $238. So it's finding support right now, which is good because it seems like the growth decline has found support. Okay, another company to talk about right quick. I see your ticker there, TWTR Twitter. We will look at that. Let me look at PayPal real quick, and then I'll go look at Twitter. PayPal, PYPL. We've been talking about this, I think, every day now for a week. And PayPal, it reached a 52-week low today. So it dipped below that $200 that we've been talking about. But it got down to a low today of $184.28. And that is a 52-week low. So as it's looking for some kind of a bottom to bounce from, I think it has found it here at around $185 or so. Now, I thought that $200, give or take a couple of bucks, was a fair price for PayPal. And I added last week when it was down around that price. Today, I bought a little bit more. I think there's a stronger bounce today off of, you can see this this bounce, and let me circle it, make it more legible here. This bounce right here that occurred right around that $184 mark. It's 52-week low. That blue support line has been drawn there for a while too, but it bounced off of that nicely, and it ran up and it rallied, and then about 3:15 it started to sell off some. But the positive that I see here is that it broke above its 50-day moving average, which I find it funny, but I say it every live show. If a stock, even crypto, Bitcoin, Ethereum, right, Cardano, any of the other ones, Solana, if it's above the 50-day moving average, that's a positive bullish structure. If it's below the 50-day moving average, that is a negative or bearish structure. So seeing it bounce above that 50-day moving average, even though this is the 5-minute chart, so it doesn't mean as much as if it was a 1-day chart. And let's go look at that. It is well below its 50-day moving average. So this is still a negative and bearish structure. But on that 5-minute chart, it was positive to see that bounce. Now, you can see the two blue lines right here. Let me do this. There's two blue lines right here. This is that area of support that I think is really strong. Again, we had $200 for about a week. Then it broke below it. But I'm more comfortable with the probability, and that's what trading is, investing, probabilities, what might probably happen, right? Those two support areas, and that is between $185 and the lower one is $180. So between that $5 spread there, it looks like a really strong support area for PayPal. Now, I do want to point this out because I want to be held accountable for anything that I say. And I did say $200 was a good entry point. And now it's down to, it got to 184, a 52-week low for them. But they're back up to 189 now in after hours. So that's PayPal. And we'll go hop in to Twitter right now and see what they're up to. TWTR. Remember, if you have a question, just leave the ticker symbol in the question, and we will go over it. Now, one quick thing, though, to point out about PayPal and the fintech sector that it's in. It's not the only company falling. I know it seems like it's the only company we're talking about, but Square was also down. I think they were down about 7% or so today, and Robinhood has just fallen off the map. Visa and MasterCard were both down between 2 and 4% today. So it's not just PayPal falling, it is that whole sector falling for some reason. And I don't quite have Yes, and SoFi was way down today too. Yes, it was. So I don't quite have my finger on the pulse yet for why that is happening, besides that the market is just in a weird place right now. Um, so who knows what the reason might be, but it has been affected. Okay, Twitter. Twitter was in a range bound here for a little while, with support around $58 and resistance around let me say $67, give or take or so. Uh, Hedgy voodoo. Yeah, absolutely. Um, Voodoo. That's funny. I sent a tweet out, and I almost used that term voodoo when talking about the whole technical analysis for finding or using the oh, the names just slipped me. The Fibonacci retracement tool. Some people don't believe in technical analysis. I do. However, it's not the only thing that you use when you're trading and investing. It's just another data point to help you build your investment thesis or your trading strategy. So yeah, that's funny. Okay, Twitter has just fallen off since October 27th when their earnings came out. And the big reason for their fall is the whole Apple ATT, right? Is that right? ATT or TTA? But it's because of the ad blocking that Apple put in their latest iOS update. Now, Twitter, Snap, hugely affected by this. So you're on your phone and you can actually opt out of being tracked by advertisers like Twitter, for example. And more people did that than Twitter expected, for sure. So with less people being able to be tracked, then Twitter can't serve up as dialed in advertising as it used to. So they're going to have to find a new way to target people, or I don't know what the solution is right now. But that's the reason for their decline. They just cannot, they just don't have it right now because of that. And since they don't have an answer, and remember, stocks are based on what the company is doing in the future. Since Twitter doesn't have an answer for that, it has fallen. It is in a bearish, negative structure. It came really close to a 52-week low today. It got as low as $46.52. And the 52-week low is $44.40. So it's less than a couple bucks away from hitting that. It's liable to get down that low tomorrow and hit that point. But that's what's going on with Twitter right now. I don't think it's a good investment right at this moment, just because they have got to figure this whole ad tracking, blocking thing before they can get back to any type of normalcy with advertising. And since Twitter, like Facebook, for the most part, are really driven by ad revenue, they're going to be affected until they can find a workaround. So I don't find Twitter investable right now. I think they can continue to fall. I think it's a good chance they're going to hit their 52-week low tomorrow. But there's trading going on around it. I mean, it's up 0.3% in after hours right now. I go look at the 5-minute chart just to see what people who are trading this are looking at. You see a couple of bounces right here. One here on November 19th, there was a bounce. Looks like it got to its 50-day moving average and it bounced off of that. Then it got oversold. You can see on the RSI here, and that was based off of momentum and volume. and then both volume and relative strength index both fell down, and so the stock. It popped back up to oversold right here at about 3 o'clock today. So a sell-off for the rest of the day was expected when you see RSI being oversold like that. I mean, yeah, overbought, I mean. Because it got up to, what was this high right here? This was an 85.16, and anything over 70 is overbought. So it looks like there's trading on this thing as it's going down. I wonder what the put call ratio is. I bet you there are way more puts than there are calls on Twitter right now. Let's see. TWTR, and it's loading. All right, let's see here. Let me go check here right quick. All right. So yeah, Twitter hasn't gotten any upgrades or downgrades since its last earnings report. Right now, it's got a price target. I'd say probably about $75. These analysts must have more. Must believe in it more than I do. Let's see. Well, no, I don't see it. Okay. Okay, where is it? I know it's in here someplace. Okay, so it's 80%, just about 80%. 79.2. So that is very bearish on Twitter. Very bearish. Okay. So, quite frankly, I don't think there's much to talk about Twitter because they are in a huge downtrend. They're going to continue to bleed, all because of their main source of revenue is serving ads. And since they are being blocked from doing that and they need to find some kind of a workaround, it's just going to continue to fall like this. So that's my quick thoughts there on Twitter. Okay, anything else that you want to talk about? Just leave the ticker in there. I'll just plug in SoFi right quick because we've talked about that quite a bit, but it fell today. A lot of growth companies fell today. They were down 7.95% and 0.3% in after hours, so over 8% for the whole day. But they have been red for nearly a week now. And if we just measure this decline, it got up here and it fell down. Let's go to the tip for today. 25% in about a week's time there. And we talked about this thing. $21 I thought was a fair entry point, but this thing has fallen. It's $18.69 right now. So yeah, I do believe that it could potentially be falling even more. Now, one thing that I would watch, even though it is it's a fresh young company, hasn't been public very long, just about a year. In December it'll be a year. The 200-day moving average has just popped up since about the middle of September. It'd be interesting to watch and see what happens. Does it bounce off of that, or does it continue to fall? And right now, that 200-day moving average is at $18.08. And RSI right now is a 38.91. So it's not oversold, but it's 8.91 points away from being oversold. And that's been falling now since November 4th. I'll put a trend line on that so you can see on the RSI from November 4th to today, it's just been falling down there on the RSI. Now, volume, though, there's a divergence there because volume has actually been picking up. Even though volume has been picking up, it's selling volume. So that doesn't help too much. But yeah, they're diverging a little bit there. So that could give me a pause that maybe a slowdown could be occurring. Maybe we're not going to see these 7% or 8%. Let's see, 2.6%, 2.5, 0.7, 0.9. 7.7, 12.4. So maybe we'll stop seeing such big declines as these two are starting to diverge a bit, and it's getting close to that 200-day moving average. So I'd watch that point. It's at 1807 again. Just watching that. Now we've got a support line here at 1775. To me, this dip that SoFi is going through is a buy the dip opportunity. Talking about buy sell signals, if it got down to this 1775 or broke under $18 and got into the $17, I would buy at that point for sure. If it got here to the 200-day moving average and bounced off that, that would be a place where I would buy to add shares. And this is the time in the market where whatever it is you're investing on a weekly, bi-weekly, monthly basis, you want to just take that cash and just put it aside right now. You don't need to rush out and invest and chase any of these stocks. Put it aside, and when you see companies that have fallen 20 some percent, 30 some, 40 some percent, then you take that cash and you buy on red days. Never buy on green days unless you've got a special day trade or swing trade setup that you're doing. Don't buy on red days. Dollar cost average, that is your best tool for long-term holding. So just a couple of things that I do when I'm investing long-term in the market. Okay, a couple of companies to run through had horrible days today. Peloton hit a 52-week low. Redfin, Roku, Shift, Smile Direct Club, they all hit 52-week lows today. Workhorse, XL Fleet, Zillow, oh my gosh, Zillow, and Zynga, they all hit 52-week lows today. And Wejo, who recently just popped on the market here from a reverse merger, and their ticker symbol is their name, WEJO, Wejo. They came on with a boom and then a bust. So their first day, they were down 3%. Next day, up 2.6%. Then on November 18th, right? November 18th, this thing shot up 43.9%. It's amazing. And that was a very sweet trade, I might add. I did mention this in the Catalyst Watch video 2 Sundays ago to keep an eye on this SPAC when it merged, because Wejo, even though it's not a big company, it does have a lot of big partnerships. It's partnered with Palantir, for example. It's partnered with Microsoft, for example. So it's got a lot of big partnerships with it. But then we get to today, and it lost most of that. It gave most of those gains back. It was down 27.5% today, and in after hours, it is flat. It's up 1 penny. So the big ride for this, I think, could be over. I don't think we're going to see another major run like this on Wejo, but it is worth pointing out because it was mentioned in the Catalyst Watch video as a potential play as the merger went through. And it did. It popped and it snapped right back down. It actually got to a 52-week low today of $8.25. And that was below its pipe offering of $10. So it will probably bounce and at least get back up above $10 in short time. I would guess so. All right, another company that we looked at last week, Stone Co. Ticker symbol is STNE. Now we looked at this company. They're a fintech company, and I just want to point out a couple of things here on it. It fell today. It was down 11%. It's flat in after hours. It's up 1 penny. But before the fall, when we were talking about it last week, I drew these two probability lines on the chart because it had been in this downtrend. You can see it a little better here. It was in this downtrend trading channel and just kept falling. And then I put these purple lines on and kind of predicting where it might go. And I predicted it's either going to come down here and bounce and go, or it's going to come down even further. And wouldn't you know, this is quite funny. I'll zoom in so you can see it. Where the stock is sitting at right now, I'll put this right here. All right, see the red bottom right here where this black just keeps popping on and off the screen. There's a red little line there. It's got a number in it, $17.01. That's where the stock ended today. And that's exactly where that purple line was drawn. I don't know if that's a coincidence or luck or that was skill, but it was one of the three for sure. But I just wanted to point that out. It did fall. We talked about it. I said it could. It looked like a good company, but it was a young growth company and a lot of speculation for them. All right, let's go to the EVs. We seem to talk about them every day. I'll go through them real quick. There wasn't too much news except for Rivian. There was something I want to add. Lucid, LCID for Lucid Group. Plug them in here so you can see the chart. They were down today 7.4%. I think the volatility in these EV stocks will continue to bounce around. You'll have a big red day, big green day, big red day. It's just going to all depend on the mood of the investors. But I do want to point something out here for Lucid. If we look at the relative strength index from November 8th till today, it is declining. That means momentum is getting lost for Lucid. And if we look here on the volume is ticking up. So the average for your trading volume is ticking up while your relative strength is ticking down. That's a divergence. When you have a divergence in certain things on the chart, that can be very key in telling. In this example, I think it means that momentum and interest are being given up, lost in the Lucid Group play. So they could start seeing more red days than green days. But with these momentum plays, it's really hard to define. It is way above its 50-day moving average. A pullback to that would not be out of the cards. So play it carefully. All right. Now I'll go to Tesla next and then Rivian because there's something to say there about them. Tesla, TSLA on the chart here. Now, Tesla was up 1.7%. Nice growth. It's flat in after hours. We had this wedge pattern starting to form, but it has taken off from that. This is a very bullish stock. And if we look here on the RSI down here, it kind of bottomed out on November 12th, and it's been ticking up ever since. Now, of course, the stock, for the most part, has also been ticking up since then. And volume, and if we go to that same point, volume is about flat for the average. So this is still in a bullish structure. Could you imagine if there was the mention of a stock split? What would happen to the stock right now? Just think of what happened last year when there was a stock split on Tesla. That would be incredible. Okay, Rivian, ticker symbol RIVN. Rivian, a couple things to say about them. I know the chart doesn't look like much. This is just the day chart. Haven't been public very long. Their first week was really nice. They took off, but they've been going down now. Down 8.1% during hours, down 1% in after hours. I said if this company gets down to $100, that would definitely be an interesting. What? Excuse me for all that noise. I have no idea what that was. Okay, sorry about that noise, guys. Rivian, if it got down to $100, I figured that would be a good entry point to start maybe accumulating or dollar cost averaging into Rivian if you think it's for you. I also pointed out this where these two blue lines are. I thought it could be an interesting place. That was between $120 and $125. It kind of stalled around in there for a few days on its first day or first week and its second week of going public on the way back down. It kind of stalled out down there, but it has continued to fall. So we'll see. If it gets to $100, then that would be more interesting. And of course, under that would be even better. Now, with Rivian, they've had some bad news, and I think that's helped to contribute to the decline. But notice on today's daily candle, right? There's a huge wick underneath the candle. This thing fell to $106 as a low, but then ended up finishing at $118. So that has something to say right there about that $100 mark. I think there's going to be quite a bit of nibbling going on the closer it gets to $100. But the first story, and we talked about this on Friday, about the Amazon story that Rivian's vans underperformed. It was based off of one report and one test driver for Rivian. But then there was a second piece of news that came out on Friday that I totally missed. And I guess it was I don't know, a story that wasn't talked about very much. But on Friday, Rivian and Ford announced they no longer plan to co-develop an electric vehicle. Now, the two companies initially, and I didn't even know this, announced a development or the assembly of a joint venture where they would build an electric vehicle together. And that was back when Ford invested $500 million into Rivian back in 2019. I didn't even know that that was part of the deal. I didn't dig into it at that point. But this separation. Now, Ford still owns its stake in Rivian, and that's about a 12% stake that Ford owns. Now, I don't know what this means. Does this mean that Ford doesn't think that Rivian is capable? Or does Ford think that, well, you know what? We just got this windfall from Rivian's IPO. We weren't expecting so many billions. So we're just going to take our money and just kindly build our own. I have no idea what it means, just speculation. But it could either mean they saw something negative in Rivian, or maybe they thought their technology was good enough. Okay, while we're on the subject of EVs, let's talk about EV chargers. Blink Charging, they didn't do so good today. BLNK, they had a downgrade today. Their shares were down 11.3% today. Uh, Blink Charging, they had a beautiful setup. It was executed nicely, nice breakout, beautiful run up, and now profit taking is occurring. So Cohen, which is the investment company, they downgraded Blink to market perform from underperform. I mean outperform. Excuse me. Market perform from outperform. So that means that they're just going to do just as good as any other company would. There's nothing special about them. That's what that downgrade says. Now, let's also check in on ChargePoint, ticker symbol CHPT. ChargePoint, not as bad. It was up 1.4% today. Uh, Flat in after hours, 0.5% down in after hours. Now, it had a beautiful chart set up, beautiful rally. We called this one really well. It is now starting to set up another wedge shape here, symmetrical triangle. So I'm watching to see if this is confirmed or not. Remember, when you are putting these trend lines on the stock chart, you want to have 3 or more touching points on the line. Right now, I've only got 2 on the top. So this is not confirmed yet. Today's candle wick almost went up to it, but not yet. So this has not been confirmed. On the bottom support line, I do have 3 touch points. That's at the beginning. That's here on the 18th, and then again on the 19th. So all I need is another touch point at the top right here, and this would be a confirmed wedge pattern. It could be considered a bullish pennant, but watching that one to see what could happen. Now, with the whole EV market having a spectacular October and many of them doing really well in November, are they to the point where maybe they are going to pull back? Maybe the next move for the EV market is a pullback. That could be. So watch it carefully. If you're in any short trades, just keep that in mind that it's getting pretty frothy. All right, let's talk about some positive companies that did pretty well today. And then I'm going to get into the deep dive on Palo Alto Networks and another company that I haven't talked about before. Positive names today. Apple, for example, AAPL, new all-time high for Apple. They have just been wonderful. Okay, this is the daily chart for Apple here. Really well. They are extended here on the RSI. They are at a 79.37. So they are overbought at the moment, but they've just been creeping up little by little all last week. And then today it got that new all-time high, but then it pulled back from that. So Apple, new all-time high today. Microsoft, new all-time high today. Home Depot, I can't believe it, new all-time high today. They have been running since earnings, and so has Lowe's, who also hit an all-time high today. NVIDIA, all-time high today. AMD, all-time high today. Costco, all-time high today. Tractor Supply Company, all-time high today. Enphase, all-time high for today, which is my favorite solar pick, but it's a bit too expensive right now. Etsy, all-time high. Now, let me pull up Etsy here because I got something to say here about Etsy. ETSY. It's their name and it's their ticker symbol. But Etsy, it was mentioned in yesterday's Catalyst Watch video when we were talking about the retail that will benefit from a big holiday shopping season. right? When numbers come out for Black Friday and the weekend shopping and Cyber Monday, when those numbers come out, that could be a real catalyst for the retail space, for retail companies, Walmart, Target, Amazon, Etsy, Shopify, Best Buy, you name it, the retail stores, they could have a real catalyst with that information. Now, Etsy here, they were in a really nice defined uh, ascending triangle, where the top line is completely flat, but the bottom line is going up and to the right. That's an ascending triangle. Now, if this was reversed, where the bottom line was flat and the top line was coming down, that would be a descending triangle. Now, they broke out of this real nice. They back tested this area. They bounced off of it. They got to the top of their trading channel, and then they came down. Now, to me, that's perfect right there. That is perfect execution, staying within these lines that are all defined and they're out there before the stock moves. So anyone who is skeptical on technical analysis, when so many different traders are using the same exact technical analysis, it is not voodoo or crazy speak or pointless. It is useful. It's just another data point, though. Just don't look at technical analysis alone. Okay, another one, Best Buy. It hit an all-time high today. Ticker symbol BBY. Let the chart load there so you can look at it. Now, you're probably noticing something similar with all of these companies that hit new all-time highs today. They hit that all-time high this morning, and then they sold off throughout the rest of the day. Best Buy, it went right up to the top of its trading channel perfectly, got a new all-time high of $141.97, and then bounced off of this trend line in its trading channel and came back down. That is perfect execution again for that trading channel. Now, this was also on the Catalyst Watch yesterday when talking about retail. Now, there's another company that we talked about a little while ago, and I believe I did a deep dive on it, and that's Aspen Aerogels. Ticker symbol is ASPN. Guess what they did today? New all-time high. That's right. $65.99 is their new all-time high. And just like all the other all-time highs that we have looked at so far, they hit that in the morning and then they pulled back the rest of the day. Now, we talked about them around earnings, and they have just been on fire running after earnings. Let's measure this. We got to come down here to be honest. We got to go from the close before earnings and measure from there to capture earnings. And it ran up 41%. And then, of course, pulled back and closed today up 34% since earnings. That is an incredible rally. And seeing today reaching a new all-time high with this momentum, look at the RSI down here. It's been kind of flat, but it's on the upper side of the relative strength index. Right now, the number is at, let's see here, 73.92. So that's overbought. We got 75, 77. I'm going back in time here. 72. We get down to 68, 71, 73, 70. So for the past few days, it has been on this big momentum rally. This would have been the time to take profits, this all-time high, because this type of rally where the relative strength index is just up here overbought day after day after day, that cannot continue forever. So a good signal for getting out of a trade would be seeing the RSI kind of flat, moving along like that. Volume is actually ticking up. You can, this orange line, I know it's hard to see on your screen, but this orange line is the average for volume, and it is ticking up. It's ascending right now. So when it reached an all-time high today, those are two signals that tell you it's a good time to take profits on that trade. All right. And I do believe we talked about this company in the Catalyst Watch video 2 Sundays ago for its earnings specifically. Okay, a company that kind of fell today, and I've gotten requests about it, is Teladoc Health. I see your ticker symbols, and I get them, and I tell you that I'm going to talk about them, and I do. I just want to make sure you understand that. That's why I'm talking about Teladoc Health right now. It's been requested with after hour or not after hour, but in the rewatch of these videos, I'm getting questions for different ticker symbols. So here's one that was down 6.7% today. It had a little rally after earnings. Here, I'll put a little vertical line right there. You can see where earnings were. It ran up, but then it's just been selling off. And it really sold off the past 3 trading sessions. I mean, look at that. Look at the volume candles for the for trading right there. They're all red, all 3 of them. That is like 4 times what normal volume is. Let's see here. Almost that. It's 3 times the amount. So all the past 3 trading sessions, selling pressure, volume has been 3 times average volume. The RSI is in the gutter right now. It's at 21.43. And remember, 30 and below is oversold. So this thing is way oversold right now. So why did it fall so much today? Well, BTID downgraded Teladoc Health to neutral from buy. And they say that they like Teladoc Health. They believe in what it's doing. They believe in the leadership. They believe in the virtual care space and what Teladoc Health is doing to lead that segment. But they downgraded the stock to neutral for a couple reasons. One of them being disappointment overall membership growth. From 2021 to 2024, BTID estimates that management is guiding just a 1 to maybe 5% year-over-year membership growth. That is really small growth. And since membership is a leading indicator of long-term growth, then it doesn't seem like there will be aggressive growth for the company. So keep that in mind if you are a fan of Teladoc Health. Now, another one I want to look at who is actually bullish, not negative, and that's Airbnb. Ticker symbol is ABNB for Airbnb there. Now, they blasted off from earnings. Let me put a vertical line there so you can see it better. They had a nice blast off from earnings, a sell-off. They touched the top of their trading channel right here. They used that as support. They blast off again, and then they sold off today. Now, when they sold off today, they were down 7.4%. They bounced off their 50-day moving average, which was just about where the bottom of their trading channel was. So to me, that's a positive sign. But why am I saying Airbnb is bullish? Well, they're bullish because of the call activity in the options market. Remember, when you do a call option, you are betting the stock will go up. If you do a put option, you are betting that the stock will go down. So the December $250 calls are seeing interest in Airbnb. Now, even though it was down 7% today, a little bit over that, 7.4, there was a lot of red today throughout the sector, quite frankly. So just want to point that out. In the options market, there is a call at $250 for December, and it is loaded up with a lot of investors saying that 250 in December is where Airbnb is going. There are way more calls than there are puts against it. All right, a sector that actually did pretty good today, and I don't talk about it enough, is the boating sector. If I hop back over here for a quick moment, over to Webull, and I go into my boating group here, look at these numbers. All but one was in the green today. We've got 4%, 3%, 3%, several 1%, and two between 1% and 0.5%. So the boating industry was actually a pretty good industry to be in, or sector, I should say, today, because all but one were green. My two favorite are Brunswick. Ticker symbol is BC. They're sitting at $101 right now. They were up 1.6% today. And then Marine Max, and their ticker symbol is HZO. They were up 3.3% today, and they're sitting at $57.11. That's my two favorite in the boating industry. And the boating industry has been doing very well this year, from boat yacht manufacturers to the actual dealers. Okay, I'm sure you are ready for this. I said I would do it on Friday, but we ran out of time with your wonderful questions. And again, if you have questions, feel free to put them in the comments with the ticker symbol, and we'll go over it. Next up, Palo Alto Networks, ticker symbol PANW. Give me one quick second here. All right, that's a bit better. Okay, Palo Alto Networks. They were up 1.8% today, flat in after hours. They have been slowly ticking up since the big blast off from their, not their most recent earnings, but the earnings before that, when there was this big gap up and this big hole in the chart. But then if we go look at the whole year, besides this little bump and pullback here in March, it's been doing wonderful up and to the right on the stock chart. And people actually undersold, or oversold, excuse me, oversold Palo Alto Networks going into the previous earnings. That wasn't a smart move, but for those who were paying attention, that was a great buy the dip opportunity, because it came really close to that 200-day moving average, and it hasn't looked back. Now, Palo Alto Networks, they're up about 8.8% since earnings. I wanted to talk about them for a while, but your questions are awesome, and I love your questions, and I love going over what you want to talk about rather than whatever I want to talk about. Now, Palo Alto, it secured some gains as accelerating growth points to market share expansion. The cybersecurity space is a highly competitive and crowded industry, but Palo Alto Networks demonstrated in their earnings yet again why it's considered to be a leader in the field after issuing a strong beat and raise Q1 2022 earnings report. highlighting awareness of cybersecurity risk in the public and private sectors has pushed organizational leaders to prioritize spending on technology that protects against cyber attacks and malware threats. That urgency has only increased in recent years when several high-profile attacks, such as the Sunburst incident this past January, illustrates how complex and devastating such breaches have become. Like many of its peers, Palo Alto Networks is experiencing an upswing in demand from this trend, but it's capitalizing on the favorable environment better than most and is likely gaining market share. And that's a big deal. What especially stands out to me is that Palo Alto's quarterly result and recent financial performance is the consistency and the accelerating growth, being consistent and growing growth. This quarter marked the 7th straight in which it exceeded EPS and revenue estimates. Meanwhile, revenue growth improved from 24% in Q3 21 to 28% last quarter, and then 32% this quarter. That's quite impressive. A very impressive feat, considering that the company is now generating over $1 billion in revenue per quarter. That's right, per quarter. For the sake of comparison, competitor Cisco, and I know we bag on them a little bit, they reported an 8% increase in Q1 2022 revenue, while Juniper Networks' Q3 21 report showed a bump of 4%. Its future does indeed look bright, but its guidance does seem a bit underwhelming. The somewhat cautious outlook is likely keeping a lid on the stock's performance. Overall, though, Palo Alto Network's performance illustrates why the company is considered to be the premier name in cybersecurity space. All right. That's what I wanted to get off my chest about Palo Alto Networks. I think it is a good, solid, financially strong company that is worth a look, especially on pullbacks. Okay. The next company that I want to dive into a little bit deeper, I have a little trouble saying the name, but I believe it is Avaya. Avaya. Is it Avaya? The ticker symbol, I think it's Avaya. Avaya. No, Avaya. Anyway, the ticker symbol is AVYA. Let that load there for you. Now, it's in this downtrend, but it has recently flattened out. So it may have found a bottom here. Now, this stock was up 22.3% today, and it's flattened after hours at $21.99. Wow, what a move, right? They had their earnings today. Here they are. They beat EPS by 7.4%, and they beat revenue by 2.8%. This company beating EPS and revenue estimates in back-to-back quarters may not be that astonishing of a development for such a high-flying growth stock, but AVYA, they have accomplished something significant, a significant turning point in its transformation. Building upon last quarter's upside report, the provider of communications and contact center products posted better than expected Q4 21 results this morning, showing that its turnaround is gaining traction. To put AVYA's recent struggles into perspective, the company had missed earning expectations in 12 straight quarters prior to the beats in Q3 21 and Q4 21. After filing for bankruptcy in January of 2017, AVYA returned to the public markets less than a year later, but faced the same primary issue that plagued it in the years past. Specifically, the company was viewed as an out-of-date provider of legacy telecom equipment that was falling behind the curve in a cloud computing world. To monetize its products and services, and to reshape that unfavorable perception, the company implemented an overhaul that included shifting its excuse me for 1 second. Live feed problem here. I've got somehow the TV here turned on. Now I got to figure out how to turn the TV off. Please excuse me. I apologize for this. I have no idea how in the world this happened. There we go. Okay. I apologize for that. That's what's happening when we do live streams. Funny things can happen. Okay. Back to the company. Uh, they made a transformation. They updated their portfolio to what they call One Cloud. This transition was meant to better align AVYA with its customers' needs by creating a digital-enabled workspace that better supports the work from anywhere shift. Simultaneously, AVYA's new communications platform as a service, which you can call a CPaaS for short, that model would create more predictable revenue streams with higher margins. As with many other transformations, the road to recovery has been bumpy and filled with setbacks. However, after more than 10 years of annual revenue declines, AVYA accomplished an important milestone in fiscal year 21 by growing its revenue by 3%, signaling that its turnaround is finally underway, much like how Rackspace's turnaround is finally underway. At the core of AVYA's improving performance is their One Cloud, which generated annual recurring revenue. And I love the sound of recurring revenue. Back when I was an entrepreneur, the different companies that I had started in my past all had recurring revenue because I knew those were the companies that you could count on a steady income stream and a steady growth of your income stream. And that's what they are doing. Their annual recurring revenue, which is called ARR, that growth was 177% to $530 million. That is a huge achievement for them. The company's strategy to deploy its communications products, voice, chat, social media, video performance, management, etc., on the cloud is paying off, luring large enterprise back to their offerings. For the quarter, AVYA inked 119 deals with a total contract value, TCV, north of $1 million and 18 above $5 million. These large contract wins not only speak to the company's improving competition, their performance, their position, and relevance in the market, but they are also having a profound impact on its mission to become a software as a service centric business. This is reflected in the company's CAPS, CAPS, their revenue metric, which it defines as revenue derived from the cloud, alliance partnerships, and subscriptions. In Q4, CAPS accounted for 44% of total revenue, up from 33% in the year earlier. The momentum for the company's cloud business, combined with investors' subdued expectations, I would say, helps explain why the stock is rallying higher despite the company issuing downside Q1 22 guidance and mixed fiscal 22 guidance as well. Although the headline EPS and revenue guidance numbers aren't fantastic, I believe that the company's One Cloud ARR outlook is a focal point that's driving the stock. By the end of fiscal year 22, the company expects to generate One Cloud ARR, that's the recurring revenue, of $880 to $910 million. And it sees that figure climbing to $2 billion by the end of fiscal year 24. The company's results and outlook may not be characterized as phenomenal, but the important takeaway is that progress is being made and that its cloud-based transformation has the company heading in the right direction. Okay, that's what I wanted to say about them. I think the company is interesting. I think their story is interesting. And I see on the chart that investors also see the company as interesting. It's turned it around, and it's got a lot going for it right now. All right, let me know what you think. Do a little digging of your own, a little research of your own, and let me know what you think of the company. I'd like to know. Okay, if you have any questions, make sure to leave those questions in the comments. I'll be happy to go over it. I do want to point out a couple of catalysts that we're watching for tomorrow. We get earnings from American Eagle, from Best Buy, Burlington Stores, Dick's Sporting Goods, which I think that one, ticker symbol DKS, I'll pull it up here. DKS has, I think, potentially the biggest future. It might make the biggest move. Who knows? It could pull a target. I don't know. But that one I am definitely watching closely for tomorrow. We also get Dollar Tree's earnings as well. And there's a few others. But those are the ones that I'm watching for tomorrow specifically. Now, if you look at Dick's Sporting Goods, they are up here in this trading channel. They just came out of a symmetrical triangle. Nice breakout above it. And then they've been running up and to the right ever since. They reached this point up here to tap the top of this trading channel. And it's possible that maybe tomorrow's earnings are priced in. Maybe not. If you remember, I talked deeply about this company in the Catalyst Watch video from yesterday. Check it out if you have some time, if you haven't already watched it. But one thing to consider with DKS is they pay a dividend. In last quarter, they gave a special dividend of $5.50 per share. That's huge. You don't typically see that. That just goes to show how much profit this company has brought in its last quarter. And I think it could do a repeat this quarter because you had a lot of back to school, a lot of school PE classes needing equipment because either it got lost or damaged while it wasn't being used. So think there's a good chance. But I also want to watch it closely because it has run up. If we look at how much it's up right now, over here on the right hand side, year to date, 149%, totally blowing out the market. The past month, it's up 11.4. The past week, it's up 4.3%. So right now, technicals say buy, but with earnings coming up, you have to be extra careful. It was up 1.2% today. And again, it got to the top of its channel and it pulled back today. So do keep that in mind. Here, let me pull up Best Buy right quick and look at that chart too. BBY is their chart. Look at this. They made they made all-time high today, right? Earnings for Best Buy potentially could be priced in. Or we could see earnings come out and it make another move to the top of its trading channel. Even though this trading channel is very steep, it is respecting this trading channel and it is staying in it. It's using support as support and resistance as resistance. And right now, it reached its all-time high right at resistance and it pulled back and it's sitting on support right now, potentially waiting for another move like that. Maybe it'll be like Zoom today, where it had a quick run up in the after hours and then a quick pullback. It was a quick trade. All right, just some thoughts there I had on Best Buy there because they have run up quite a bit. American Eagle does report. AEO is their ticker symbol for tomorrow. And on their chart, I don't think they're as priced in as, say, Urban Outfitters was today. Remember in the Catalyst Watch video last night, I said Urban Outfitters could pull a target where good earnings come out, but then they go down in after hours. And that's exactly what happened to them. I'm not sure they have that built into them. They're under their 200-day moving average. They just recently, we'll go back here to the beginning of November, have been pulled above their 50-day moving average. So they haven't been in a positive structure for very long. And they have room to go. They're at $27 right now. They were up 1.9% today, but in after hours, they were down 1.7% today. They've got an all-time high, or 52-week high, I should say, of $39. So it has room to go. It just all depends on how they were able to manage the supply chain and how they were able to manage their finances. But there's a potential play there for them as well. They are right now a bit on the high side with RSI. They're at a 57.7. So they still have 20 points or so, 19 some points. No, less than that. Maybe 12 points before they are overbought. But that could come in tomorrow or not. All right, so there's some thoughts that I had there. If you guys have any questions, let me know. Now would be a great time because I've talked about all the different companies I wanted to today. I know I talked about a lot of different companies today, but I hope that is it gives you a real diversified look at how different companies are doing, different sectors are doing. May help you to understand better how maybe the overall market is doing. Let me pull up the losers here because we talked about some of the winners here at the very beginning. We've got some losers like Sweetgreen. They recently IPO'd. They shot way up on their IPO, and they were way too high. They were down 16%. Sprout Social, that one pops up and down some. Here's one, Aurora Innovation. There was finally profit taking for Aurora today. Ticker symbol AUR. Let me go ahead and pull them up because we've talked about them a lot. I actually made an individual video on Aurora. I think it's a pure play for robo-taxis or self-driving. They're going to focus on rigs first, and you can see that mighty big green candle there. They went up fast and far. But they were down 12.6% today, down another 3.8% in after hours. That puts the price still elevated, but it puts the price right here where this blue line is. So I'm just going to kind of make a little oval there. That's where the price is sitting at right now after today's pullback and after the pullback in after hours. So I think it could still fall some more. I'm surprised it didn't fall more than it did today, but with that run up, because whenever things go up like this straight up, it was up 51.4%. When things go up that fast in one day, they are going to come down nearly that fast the next day. So you got to be careful with that. Yeah, but that was a really good setup there for that company, and they're doing autonomous driving for big rigs. They do the hardware and software. Okay, what else do we have here? We got quite a bit of cryptocurrency stuff. Stronghold Digital was down 11.8. Blink Charging, Stone Co. We talked about them. Roblox surprisingly was down 10%. That's definitely profit taking for them. That's a gaming company, and they have a big role in the metaverse. Let's see who else we got here. Chewy was down 9.4%. Marathon Digital. Affirm was down 9%. Snowflake was down 9%. A lot was down today. Bitfarms was down. Faraday Cage, that's electric vehicles. They were both down 9%. Let's see. Argo Blockchain, they were down 8, almost 9%. Smile Direct Club was down 8.8%. Hippo, Meet Kevin talks about Hippo, 8.7% down today. Wow. I mean, just a bunch. We talked about Rivian. SoFi, we talked about, down 7.9. Flat in after hours right now. Bitfarms is actually up 2.5% in after hours after being down 9% during the day. That's interesting. True Simple Holdings, that's a competitor to Aurora Innovation. They are also working on self-driving technology. They were down 7.5% during the session today, but they're up 1.2% in after hours. That's interesting. I always like to see the after hours movers. That tells you what the bigger people are doing in the market. Let's see. GoodRx was down 7. A lot of the 7%, 8%, and now we're getting into 4%. Open Door was down 4%. Let's see. CrowdStrike was down 4.9. Teladoc Health, we talked about them. They were down 6.7% during the session, and they're up just a little bit in after hours, not much. Let's see here. Matterport, that one's been doing really good lately. It was down 6.5% today, flat in after hours. It'll be interesting to see where that goes. Let's see here. Oh, wow. Allied Sports Entertainment. Wow. I almost talked about this company in the Catalyst Watch video, but I was a little too nervous to give my opinion on it because it could have gone any way. This stock is up 16.2% in after hours, and that's from their earnings. It must have been good, but this one I thought was too risky of a move that could have gone any direction. Maybe I should have mentioned it. That thing was up quite a bit. Okay, let's see. Oh, there's old Nikola. They were down 6%, up 1% in after hours. There's Square. We talked about that with PayPal. They were down 6% today. They're flat in after hours. Hut 8 Mining. I own shares in Hut 8 Mining. They were down 6%, flat in after hours. Skills, they've just been 6%. Hydrofarm Holdings, they supply equipment to the cannabis industry. They were down 6%. So there's a whole bunch that were down. A whole bunch. It was just a red day with a few sprinkles of green. All right, ladies and gentlemen, that's all the companies I wanted to talk about. And if there's no tickers that you would like to talk about, then I'll go ahead and wrap this stream up right here. I want to thank you all so very much for being with me. I greatly appreciate it. Just looking over here for anything after hours mentioned on the wire. Let's see here. Pfizer was awarded a $1.4 billion Army contract. That's good for Pfizer. Hormel Foods increased its annual dividend by 6% to $1.04 a share. That's cool. Canoe AFV partner discloses a 5.2% stake in a 13D filing. That's GoEV, ticker symbol GOEV. So I guess Canoe's up about 1.4% in after hours. Churchill Down signs agreement to sell 115.7 acres of land. Wow. For $291 million. Wow. That's a Churchill Downs. That's a stock I like. CHDN is the ticker symbol. Let's see here. No, I guess there's no other real big news. All right. Well, thank you guys so very much for being here. I greatly appreciate it. I'll be back tomorrow, 5 p.m. for the After Hours show. And if you did find this enlightening, if you found it informative, if you found it actionable, anything that we talked about today, then I would encourage you to click the like button, share this video, because that's one of the most important things that you can do is share this video, and click the first link in the description to become a Patreon member. We've got, like I talked about in the very beginning of this stream, we've got a few things, a few ideas that we're putting together for Patreon members, trade setup for the week, different important information to go out on a timely basis, buy sell signals to go out. So we're working on several things to spruce up the offering for Patreon members. So I greatly appreciate your help in supporting the research that we do. It's very time consuming, as you know, from doing your own due diligence. So support our research, our analysis, our technical breakdowns by becoming a Patreon member. I would greatly appreciate it. Okay, ladies and gentlemen, thank you all so very much for watching, and I will see you in the next video.